You're about to lose a fortune, not because of a bad investment, but because of a hidden banking secret that's been kept from you. It's a secret so explosive that it can change the course of your financial future forever. You think you're getting a good deal on your bank account, but what you don't know is that there are hidden fees eating away at your savings. These fees can range from maintenance fees to overdraft fees, and they can add up quickly. You need to know how to avoid them and keep your money safe. For example, some banks charge a maintenance fee if your account balance falls below a certain amount. To avoid this, you can set up automatic transfers to ensure your account stays above the minimum balance. Additionally, you can opt for a bank account that doesn't have maintenance fees. It's essential to review your account terms and conditions to understand what fees you might be charged. By being aware of these hidden fees, you can take steps to minimize them and keep your money safe. You can also consider switching to a bank that offers low or no fee accounts. The key is to be informed and take control of your finances. Your credit score is a critical factor in determining your financial health, but do you know how it's calculated? Most people don't, and that's what banks are counting on. They want you to remain in the dark so they can charge you higher interest rates and fees. But you can take control of your credit score by understanding how it works. For instance, did you know that your credit utilization ratio can significantly impact your credit score? Keeping your credit utilization ratio below 30% can help improve your credit score. You can also monitor your credit report to ensure it's accurate and up-to-date. By being proactive about your credit score, you can improve your financial stability and save money on interest rates and fees. Moreover, you can use a credit score simulator to see how different actions can affect your credit score. This can help you make informed decisions about your finances and avoid costly mistakes. Loans can be a useful tool for achieving your financial goals, but they can also be a trap. Banks often hide the true cost of loans, making it difficult for you to make informed decisions. You need to understand the terms and conditions of your loan, including the interest rate, repayment terms, and any fees associated with it. For example, some loans may have variable interest rates, which can increase over time. To avoid this, you can opt for a fixed-rate loan or consider a loan with a lower interest rate. Additionally, you should review your loan agreement carefully to ensure you understand all the terms and conditions. Don't just focus on the monthly payment amount, consider the total cost of the loan over its lifetime. By being aware of the hidden dangers of loans, you can avoid costly mistakes and make better financial decisions. Saving money is essential for achieving financial stability, but it's not always easy. Banks often make it difficult for you to save by offering low interest rates on savings accounts. However, there are ways to save money effectively, even with low interest rates. For instance, you can consider opening a high-yield savings account, which can offer higher interest rates than a traditional savings account. You can also automate your savings by setting up automatic transfers from your checking account to your savings account. This can help you save money consistently and avoid the temptation to spend it. Moreover, you can consider implementing a savings challenge, such as saving a certain amount each month or cutting back on unnecessary expenses. By being proactive about saving money, you can build a safety net and achieve your long-term financial goals. Investing can be a great way to grow your wealth, but it's not always easy to know where to start. Banks often offer investment options that are not in your best interest, and they can be confusing. You need to understand the different types of investments available, including stocks, bonds, and mutual funds. For example, stocks can be a high-risk, high-reward investment option, while bonds are generally lower risk but offer lower returns. You should also consider your investment goals and risk tolerance before making any investment decisions. Additionally, you can consider consulting with a financial advisor to get personalized advice. By being informed about investment options, you can make better decisions and achieve your long-term financial goals. Financial stress can be overwhelming, but it's not inevitable. By understanding the hidden banking secrets and taking control of your finances, you can avoid financial stress and achieve peace of mind. For instance, you can create a budget that accounts for all your expenses and income. You can also prioritize your expenses, focusing on essential expenses such as rent, utilities, and groceries. Additionally, you can consider building an emergency fund to cover unexpected expenses. By being proactive about your finances, you can reduce financial stress and achieve a sense of financial stability. Moreover, you can consider implementing a stress-reducing technique, such as meditation or deep breathing, to help you manage financial stress. Financial literacy is critical for achieving financial stability, but it's often lacking. Banks often assume that you already know how to manage your finances, but that's not always the case. You need to understand the basics of personal finance, including budgeting, saving, and investing. For example, you should understand how to create a budget that works for you, how to prioritize your expenses, and how to avoid debt. You can also consider taking a financial literacy course or seeking the advice of a financial advisor. By being informed about personal finance, you can make better decisions and achieve your long-term financial goals. Moreover, you can consider sharing your knowledge with others, such as family and friends, to help them improve their financial literacy. Building wealth is not just about making a lot of money, it's about making smart financial decisions. By understanding the hidden banking secrets and taking control of your finances, you can build wealth over time. For instance, you can consider investing in a diversified portfolio of stocks, bonds, and other investments. You can also consider starting a side business or investing in real estate. Additionally, you should focus on reducing debt and building an emergency fund. By being proactive about your finances, you can build wealth and achieve financial stability. Moreover, you can consider seeking the advice of a financial advisor to get personalized advice on building wealth. Banks often hide secrets from you, but it's not just about the secrets themselves, it's about how they can affect your financial stability. By understanding the hidden banking secrets, you can take control of your finances and avoid costly mistakes. For example, you should understand how to avoid hidden fees, how to improve your credit score, and how to make informed investment decisions. You can also consider seeking the advice of a financial advisor to get personalized advice. By being informed about banking secrets, you can make better decisions and achieve your long-term financial goals. Moreover, you can consider sharing your knowledge with others, such as family and friends, to help them improve their financial literacy and avoid costly mistakes. Thanks for watching. If you want to learn more about hidden banking secrets and how to improve your financial literacy, be sure to subscribe to our channel and hit the notification bell. In our next video, we'll be discussing the top 5 ways to save money on your everyday expenses. Don't miss it.